Howdy. Ken Peterson coming at you with a special Ken's Corner. And first, it sounds like FHA may keep their temporary loan limits higher, which for Lancaster County area is nice. It'll keep FHA numbers allowable up to the 370 range, so that's pretty cool for FHA. We'll see. Sounds like Freddie and Fannie are going to keep their loan limits where they have been. But we'll let you know as soon as that gets announced officially. We'll let you know. So, are you feeling like your buyers are really going through the loop with a mortgage app? Well, here's why, okay? Mortgage fraud is still, mortgage and real estate fraud is still on the rise, okay? Despite everything that's happening in the markets, fraud is still on the rise. And Pennsylvania is no different, okay? We tend to look at things through rose-colored glasses, but PA's top 17th ranked state in regards to mortgage and property fraud. So we're not, yes, it is happening, and unfortunately, probably even right around here. But your buyers are feeling it, and believe me, I don't care what anybody says. I still think loan guidelines are relatively lenient. It's the documentation that people need that's really tightened down, okay? But it's because of the fraud. And let me tell you what we're hearing in regards to fraud. And this is where it's really important for you. On mortgage apps themselves, mortgage applications are fraudulent. So internet apps, okay, mail apps, phone apps where we don't meet people, highly scrutinized. Appraisal fraud, still, even though we're not ordering appraisals ourselves. Tax return fraud, even though we're pulling 4506Ts. Yes, tax return fraud. But for you, listen to these. This is what's going on in the world, okay? Foreclosure rescue schemes, helping people out of foreclosure, buying the property for them when it goes to foreclosure. Builder bailouts, short sales, and illegal flipping. Two of the highest areas of fraud. Contracts that are written on the same day of a foreclosure or short sale, highly scrutinized, very risky. Short sales and flips purchased within 30 days of the original sale, 60 days, 90 days, huge risk to the investors, huge scrutiny. It's why a lot of lenders won't even do those loans. It's why FHA had a 90-day flip rule, and the FBI actually lobbied to keep the flip rule in place, but FHA wanted to help the market move on, so they nixed temporarily the 90-day flip rule. So short sales, foreclosures, flipping, property flopping, it's a new one I just found out, are big hot items to underwriters and investors and lenders and highly scrutinized, okay? So, if you wonder why it's hard to find the loans, the interest rates are higher, a lot of people aren't even touching them, that's why. The risk of fraud jumps dramatically on foreclosures, property flips, and short sales, especially when contracts are written on those properties shortly after the sale. So, just a heads up there. Now, to help your buyers in your transactions, down below is a link. Put together a nice long one-page. Most of you already do this, but every realtor needs to tell their borrowers what's going on in the application process, because they hear it from us, but they may not believe us. But they believe you, okay? And if they hear it from both of us, even better. But down below, all the documentation that pretty much every lender across the country is collecting these days. The pay stubs, the bank statements, the full tax returns, the W-2s, real bank statements, all pages. It's all down below. You can just give the whole thing to your borrower. Read it yourself, get to know it, read it yourself, and caution your buyers. The guidelines are still pretty lenient. It's not hard to buy a house. It's just the documentation requirements. You have a great day. I'll catch you soon. and help yourself to smoother transactions.